Second important thing to pay attention to with respect to incremental cash flows, incremental, are allocated costs. An allocated cost, it's a cost that's paid at the firm level, like the CEO salary or property insurance premiums or rent if an entire office building is rented. And then for internal accounting purposes, firms will apportion that expense across different parts of the firm, different divisions, different departments, different units. It's often used to assess the performance of different parts of the firm. Sometimes compensation is tied to it, and so it's an allocated cost. What's important is to use the incremental amount of the cost. If we do the project, how much of the total cost? What or how much is the total cost that's relevant here? How much of this cost that's allocated to different sections? How much does the total of it change? What is the total of that cost with minus what is the total of that cost without? That's what's important. What's not important is how much is allocated or apportioned to the project. Doesn't matter what gets assigned to them for internal purposes. What's important is let's look at the total cost with minus let's look at the total cost without. So a couple of examples. We have K-Corp. Right now they sell three types of units, low, medium, and high end, three different divisions. They're thinking about going, top shelf with a very high end unit. So this would be a new fourth division, this project. If the unit is not produced, IT expenses. So the firm has a central IT department that services everybody in the entire organization. If they don't produce it, there'd be three divisions, low, medium, and high, and each of them would be charged $1 million of IT expenses. Suppose the new unit is produced, which means the project is pursued. So again, this is without and this is with. Then the firm would allocate evenly to all four divisions, the four divisions being low, medium, high, and very high. And each division would be charged $750,000. So the question is, how much IT expenses should be included in costs that are included in the net income statement, that are included in operating cash flow, that are included in relevant cash flow, that would be used to figure out NPV? And the answer is 0. And why is that? Well, what would the IT cost to the firm be with the project? Well, we have four divisions. And if they're each charged $750,000, then we know that the total IT cost to the firm would be $3 million. Total with is $3 million. How about total without? There'd be the three current divisions, low, medium, and high. They'd all be charged $1 million. And if each of three divisions is charged $1 million, $3 million. So it's $3 million with IT costs, $3 million of IT costs without. So the decision to do the project, to add the new unit, to open up the fourth division would not change IT costs, so you wouldn't want to include any IT costs. What if now all four divisions would be allocated or would be charged $800,000? Then $200,000 would be used as the cost in our analysis. So we're putting together our income statement. If this was the only costs that would be used to analyze the, whether to pursue this project would be $200,000. How do we get $200,000? Well, if they do the project, there's four divisions, all charge $800,000. So 800 plus 800 plus 800 plus 800,000 means total IT costs, if they do the project, would be $3.2 million. If they don't do it, the three divisions would be charged $1 million, and so it'd be $3 million. So the decision to pursue this project, going and adding a fourth division, selling out this new unit, would increase IT costs from $3 million to $3.2. So it adds $200,000 in costs, and that's what gets included. Doesn't matter that they're allocated or charged $800,000. What matters is the total with minus the total without. What if all four divisions were charged $650,000 with the new division? Then the amount that would be included would actually be negative $400,000. And how do we come up with that? All four divisions each charge $650,000 means total cost would be $2.6 million. We've already seen that if they don't do the project, there's 3 divisions at $1 million for $3 million, so costs actually go down. So suppose this is a fixed cost, and let's say there's variable costs of $1 million, then, you know, if that variable cost is $1 million and this is negative 400,000, we would use as our costs 600,000. So, you know, we have the 1 million variable, we'd have the negative 400 fixed. Our total cost that we would use in our income statement would be 600,000. Costs would actually go down in this case. Finally, what if the managers of the 3 existing divisions say, you know what, let's allocate all 3.2 million to the new guy, to the new division. It'll help our performance. You know, we'll have no IT expenses. The manager over there will have all 3.2, so it'll make us look great, and it'll make him look terrible, and we'll get big bonuses. Even though all 3.2 million is allocated to the new one, how much gets used in analysis? 200,000. Because again, it's with. One division gets charged all 3.2 million, so you get 3.2 million. Here, without, you get 3 at $1 million, so it's 300,000. Total of 200,000. It's total with minus total without. Again, it doesn't matter how it's allocated.